Just gone 20 minutes after 2 o'clock here on ENCA. Hello, I'm Gareth Edwards. The Reserve Bank Governor, Lesetso Kgonyago, is expected to announce the latest on interest rates today at 3 o'clock. Today it will be live. Some economists saying there could be a basis points cut of 25 given the devastating effects of COVID-19. They say such a decision would be an indication of the bank's commitment to supporting the economy in what is considered the worst crisis that South Africa has faced in a century. Joining us now for more is Chief Economist Azar Jammine from Econometrix. Azar, always a pleasure speaking to you. 25 basis point sounds like it's a gift to many people with home loans and credit card debts, but there's still some debate between economists about how much wiggle room there actually is.
The reason why there's this debate regarding the wiggle room is that the reason why the Reserve Bank can cut interest rates right now, ostensibly, is because fuel prices fell back so sharply in April and May, and as a result, the inflation rate has fallen very steeply to just 2.1% in May. And that ostensibly gives the Reserve Bank ample room to cut interest rates. But on the other hand, we also know that since then, fuel prices have risen back very sharply and are not yet reflected in the inflation rates for June and July, which will only be released over the coming month. And so there is this dilemma between, does the Reserve Bank really have the space or not? And that is why many economists, like myself included, believe the Reserve Bank will opt to go halfway to give a little bit of relief, but not dramatically so, as some economists are saying, a 0.5% rate cut. But at the same time, the Reserve Bank is also experiencing a lot of pressure from various interest groups in the country to do something more to assist in providing relief to the economy. And the bank has resisted things such as quantitative easing or printing money to fund the government's shortfall in revenue. And instead has often said, well, the best way of providing relief is to bring down inflation, which enables us to cut the interest rates. And by cutting by 0.25%, it at least appeases its desire not to increase inflation, not to allow inflation to rise back too sharply, but at the same time to show willingness to provide some assistance to the economy.
Azar, assisting the economy is one thing, but perhaps you can help me understand, someone who failed maths in both high school and university level, how is this going to help stimulate the economy?
It won't help. You're quite right. Stimulus is the wrong word. One should rather use the word relief. The fact is that for all those who carry car loans, home loans, businesses who have borrowed money, a 0.25% rate cut means that they have to pay that much less interest every month without having to go cap in hand to banks and say, please provide us with an interest payment holiday. This way, they just will be paying a little bit less every month. And by paying a little bit less, it gives them that breathing space to be able to afford to carry on and maybe to spend which in a way that they might otherwise not have been able to do, given the hardship that they're currently experiencing.
Let's talk about hardship for a moment. Many people perhaps don't think of government as being under hardship at the moment. They took a massive loan to keep this country afloat as we headed into the lockdown. There's no such thing as a free lunch. How is that money going to get paid back one day if we keep cutting interest rates? When's this honeymoon of interest rates going to end?
If you are referring to the African Development Loan of $288 million, or about 5 billion rand, in the broader scheme of things, that's not a huge amount. What government is set to borrow around 750 billion rand in the coming year. So 5 billion is not a huge amount. And even if one then also looks at the prospective IMF loan that the government has applied for, which it could well receive next week, of another 70-odd billion rand, you're still talking about a small fraction of the government's total borrowing requirement of 750 billion rand. The attraction of taking on these loans from multilateral financial institutions is they are denominated in dollars, and so the interest rate on them is of the order of 1%, whereas if the government with most of its borrowings, has to go to the markets to borrow the money with weekly auctions to our financial institutions and foreign investors, then they have to pay somewhere in between 8 and 10%. So the big attraction of taking on these multilateral loans right now is that they are available at far, far lower interest rates than would be the case in the capital market, and that can reduce the debt servicing burden, the amount of interest that government has to pay, by a substantial amount of the order of 6 to 7 billion rand per year.
Azar, just a final question to you. I'll ask you to keep it as brief as possible. Please forgive me. A lot of foreign investors obviously put their money into the South African economy because of our very high interest rates. That's obviously good for an outside investor. Do you think we're going to see people pulling money out of the country because we keep cutting interest rates? It's not as attractive?
That's another reason why the Reserve Bank may reduce rates by only 0.25% rather than more than that, in order to prevent foreign investors from pulling out too much money. I think a 0.25% rate cut has already been built into the expectations of foreign investors. So if it were just 25 basis points, I don't think that we would see a massive outflow of capital.
All right, Azar Jammine, I see you've got a visitor behind you who's decided it's enough TV time for you. He's just behind your chair.
I can't see.
Tell him I say hi. Very sweet kid. He decided, no, it's time for you to get off TV and come play with him. Azar Jammine, thank you very much indeed. Chief Economist from Econometrix. It's working from home. The kids are home. They're going to go where they want to go.